How much does it cost to buy a home? I'm not talking about the actual cost of the home, the negotiated sales price. I'm talking about the expenses that it takes to actually get the sale closed. And there's two main categories that I want to cover with you today, and that our whole team will explain to you in person when we work with you, or your agent should at least explain these to you as you go down the road. So there's the cost before you go to the act of sale, the sale date when you would get the keys, and the cost at the act of sale as well. And this applies whether you're financing or you're paying cash. So let's get into it. Number one, the cost before you go to active sale. In Louisiana, we're a deposit state, which is different than earnest money, but basically, even if you're getting 100% financing and the seller's paying all of your closing costs, then you're going to write some type of check that's going to be deposited, right? You would get that back if you cancel for inspections, etc. But you're going to write a check that is deposited. A good deposit is about 1% of the sales price. The minimum for our area is about $500, right? So think you're at least writing a $500 check. The next expense is home inspection. We always recommend some type of home inspection from a licensed inspector because they check everything, like all the outlets, all the windows, all of it. Depending on the size of the home, including garages and porches and patios, and if it's raised versus slab, because it costs a little bit more for a raised home because they're crawling underneath the house. Low side, about $400. High side could be $1,000 for, say, a 6,000 or 8,000 square foot home. It's just going to depend on those variables. And then there's other types of inspections you can do as well. Some home inspectors will do all of it. They'll do the pool, they'll do video pipe, they'll do termite, and do the home as well. And it's a little bit of a lower price. We tend to go more a la carte to get some of the specialists in there. So like a general inspector, then the video pipe man, which runs about $250 or $350, depending on the location of the home, where it is. And then pool, like get a pool specialist out there if the house has a swimming pool. So really on the inspection side, like I said, $400, could be $1,000, depending on any specialists you get in there as well, and the size of the home. Once you get through the inspection process and that's all settled, then there's the appraisal. Now, if you're getting a loan, chances are you're getting an appraisal. There are some instances when the appraisal is waived. Typically, though, say 95% of the time, there'll be an appraisal that the bank is making you get. If you're paying cash, that's up to you if you want one or not. Typically, the appraisal runs on the low side about $450, could be as high as $600, maybe even $650, depending if there's a rush on it or anything like that. In a nutshell, those are your expenses before you go to the act of sale. You have a deposit, you have inspections, and you have appraisal. Then everything goes smooth, you're getting excited, you actually get to the closing table. Now at the closing table, you have some other expenses, and these are the quote unquote the closing cost. You've heard of these. These are things that if you're getting a loan, the lenders discuss with you. If you've asked the seller to pay for them, a lot of times, especially in the lower price points in our area, the seller is covering these for you as part of the sale. So you're not writing this big check at the sale. And if you're paying cash, well, these are greatly reduced simply because you don't have the lender fees. So closing costs are breaking down as follows. There's three main parts. Number one, like I said, your lender fees. If you're borrowing money to pay for the house, the lender's charging you money to borrow the money on top of any interest, right? Because they have the gold, they're making the rules, right? So in that instance, lender fees vary. Lender fees could be 1% of the sales price. It could be more, it could be less. It really depends on the lender. And typically, as an aside, lenders make money in two ways. They're going to have higher interest. If they have higher interest rate, you're getting lower fees. If they have lower fees, you may be paying a higher interest rate. So it's always important when comparing lenders to compare apples to apples so you know what you're getting. And then there might be some extra closing costs that you opted for. None of this is going to be a surprise to you at closing. But if you're buying down the interest rate if you're buying down the interest rate, there's a charge for that too. But again, you know this going in. Those are certain percentages of the loan. And then after lender fees, you have attorney fees. The attorney in Louisiana, we're a one attorney state. The buyer and the seller come to the table. The attorney, takes the money in. They execute the documents. Buyer gets the keys. Seller gets the check. Everybody leaves happy. All right. Some states use like 3 attorneys, which I don't know how they keep that together, but sounds messy to me. I love Louisiana for this and many other reasons, but especially for this reason. So the attorney's charging fees to prepare the documents, to execute the sale. Now that runs, could be $500, $700, depends on the attorney. The actual fee might be like only $300, but then there's a doc prep fee, a notary fee, things like that. So figure $500 to $800. Then there's the title fee. Now the title attorney, the title office is the one that actually purchases for you. Title insurance is a heavily regulated industry in Louisiana. And this is a one-time fee for your title insurance to protect the ownership chain of the house. It's a great thing to have. If you have a lender, they're automatically going to make you buy a lender's title policy. And then if you want, you can opt in to pay for an owner's title policy. Now, these rates are set depending on the cost or the sales price of the house you are buying. It could be as low as $400. It could be as high as $2,000 or $3,000. It's going to depend on your price point. And part of what a great realtor does is to get you a quote from a title company on the front end. We can estimate for you a title fee, so a lender fees as well. So going in how much it's going to cost you out of pocket. Or again, as a great realtor can, is negotiate these fees for you so that the seller is paying them for you at the sale, especially if you're trying to get 100% financing and literally not buy a house with no money out of pocket. I've seen that happen. And so going back to that deposit in step 1 that we were discussing, when you have an accepted offer, you write the deposit. I've seen it before that the buyer gets that deposit back. They get house keys and a check back in their hand at the act of sale, which is pretty cool. Doesn't happen all the time, but I've definitely seen it happen. The title insurance fee. So third part of the closing costs, or sometimes it's called closing costs and prepaids, is that kind of prepaid portion. And you're buying a year's of homeowners insurance up front. This is when you pay that fee. If you're getting a loan, well, they're definitely going to make you pay for a year's of homeowners insurance up front, as well as to give some money to seed or prime the pump of your escrow account. Your escrow account is this low. It's a great thing. It's an account that where every month part of your mortgage note goes into this account to pay for property taxes and homeowners insurance when the bill comes due for the following year. So when that big bill comes due for the homeowners insurance and the taxes, you've already paid it, and just your lender writes it out of that account. Okay, and then it goes to the insurance company and the parish that you live in to pay for property taxes, or your county if you're in Mississippi. So that's a great thing, but those are you're paying a little bit of money to seed that escrow account at closing as well. So as you can see, these costs can vary. We'll give it a summary in just a sec, because there's one more fee that's a change that's coming up on its basically a year anniversary, where buyer commissions are now part of the contract. The seller quite often is still deciding or allowing, the seller is still paying from the funds that they receive some type of commission to the buyer's agent, depending on what that is. Sometimes you as a buyer are paying a shortfall on that. But that's something going again into the sale. There are no surprises the day of the sale, which is a good thing. Full disclosure up front from the title company, from your lender, from the agent. So that if you're coming to sale with some money or no money. Of course, if you're putting something down on the note, say you're putting down 10% of the purchase price, you're bringing your down payment that day too. So to make To make sense of all this, and so you can understand what the potential expenses are, that a good agent can get you a title quote, right? Once you're under contract, so you can see what those expenses are, get the quote for the home inspector, and then your lender is already sharing you what their potential fees are as you go down the road, showing you your different loan options. We also have this incredible sheet right here, which I can share with you. I've made my little notes on here in the past in terms of so you know on your end what you're looking at. And this is something we'll review with you if you're interested, or maybe your agent and you're working with somebody else who already has one. So hope this has been helpful for you. Thanks for tuning in. By all means, give the video a thumbs up, share it. You can subscribe. We'll catch you next time. Thank you. Bye-bye.